On June 22, 2025, the world was jolted awake as the United States launched a series of precision airstrikes on Iranian nuclear sites. The night sky over Iran was lit up by explosions, and the world watched in real time as a new chapter in Middle Eastern conflict began. The operation was not just a military maneuver, it was a message, reverberating far beyond the borders of Iran and the United States. For many, it was a moment that would redefine the balance of power in the region and send shockwaves through global politics. Dubbed Operation Midnight Hammer, the mission saw advanced stealth bombers and long-range cruise missiles unleashed with surgical precision. Their targets: Iran's most fortified nuclear facilities, Fordow, Natanz, and Isfahan. These sites, long at the heart of international tension, were struck in a coordinated assault designed to cripple Iran's nuclear ambitions. The world's most advanced military technology was on full display, as the U.S. demonstrated both its reach and its resolve. This marked the first direct U.S. military action on Iranian soil in decades, following closely on the heels of a smaller targeted assault by Israel just weeks earlier. The escalation stunned observers and left millions of Iranians bracing for what might come next. For many, the echoes of past conflicts resurfaced, as families huddled in fear and emergency sirens wailed through the night. The world's attention was riveted on Iran, as uncertainty and anxiety spread across the globe. In a somber televised address, President Trump confirmed the strikes, emphasizing American resolve and warning that even larger responses would follow if Iran did not seek peace. He spoke of protecting American interests and allies, framing the operation as a necessary step to prevent a greater catastrophe. The president's words were carefully chosen, aiming to project strength while leaving the door open for diplomacy. Yet the underlying message was clear. The U.S. was prepared to escalate if provoked. The operation immediately polarized international opinion. Allies and adversaries alike scrambled to issue statements, with some supporting the U.S. action and others condemning it as reckless. The strikes redrew the lines of conflict in the Middle East, forcing nations to reconsider their alliances and strategies. Across the globe, security was heightened, and the specter of a wider war loomed large. The world was on edge, uncertain of what the next hours and days would bring. Behind the scenes, the U.S. had employed strategic deception, signaling to the world that a decision on Iran was still weeks away. This misdirection ensured that the strikes achieved maximum surprise and impact, catching both Iran and the international community off guard. Military planners had spent months preparing for every contingency, knowing that the stakes could not be higher. As news of the strikes spread, global leaders scrambled to respond. Emergency meetings were convened in capitals from Moscow to Beijing, London to Riyadh. Some nations offered cautious support, while others issued sharp condemnations, warning of the dangers of escalation. The fear of Iranian retaliation was palpable, with many bracing for a new wave of violence or cyber attacks. The world's diplomatic machinery shifted into overdrive, seeking to contain the fallout. Financial markets, always sensitive to geopolitical shocks, were thrown into turmoil. Stock prices plunged as investors rushed to safe havens like gold and government bonds. Oil prices spiked, reflecting fears of supply disruptions in the world's most volatile region. The uncertainty rippled through every sector, from energy to technology, as businesses and consumers braced for the economic impact of a widening conflict. The crisis also tested the resilience of digital assets like Bitcoin. Once seen as a hedge against instability, cryptocurrencies faced wild swings as traders struggled to assess their true role in a world suddenly gripped by conflict. For many, the events of June 22 forced a re-evaluation of what it means to seek safety in a digital age, and whether any asset can truly be immune to the tremors of war. In the immediate aftermath of the crisis, global commodity markets responded with remarkable speed and intensity. Investors, traders, and analysts around the world scrambled to assess the potential impact on energy supplies, safe haven assets, and the broader financial landscape. The uncertainty sent shockwaves through trading floors, as market participants braced for rapid and unpredictable changes. Oil prices surged dramatically, with Brent crude soaring past the $80 per barrel mark. This sharp increase was fueled by mounting fears that Iran might retaliate by closing the strategically vital Strait of Hormuz, a choke point through which a significant portion of the world's oil supply flows. The mere possibility of such a disruption sent energy markets into overdrive, as traders rushed to secure positions and hedge against further price spikes. Meanwhile, gold prices rallied strongly. As uncertainty gripped the markets, investors flocked to gold, the traditional safe haven asset, seeking protection from potential losses in riskier investments. The surge in demand for gold reflected deep concerns about escalating geopolitical tensions and the possibility of broader instability. Stock markets around the globe tumbled in response. Major indices posted steep losses, with companies heavily exposed to the Middle East or reliant on stable energy prices suffering the most. The sell-off was swift and severe, as investors reassessed risk and moved capital away from equities. The looming threat of a prolonged conflict, coupled with the specter of rising inflation due to higher energy costs, created a wave of negative sentiment across equity markets. Investors grew increasingly anxious about the potential for supply chain disruptions, higher input costs, and a slowdown in global economic growth. On the diplomatic front, international responses were mixed. While U.S. allies expressed support for Washington's actions, many also called for restraint and urged all parties to seek a peaceful resolution. The global community watched closely, aware that further escalation could have far-reaching consequences for markets and economies worldwide. In contrast, nations such as China and Russia openly condemned the strikes, adding another layer of complexity to the already volatile situation. Their strong statements heightened geopolitical tensions and contributed to the sense of uncertainty that dominated market sentiment. With no clear or unified path toward de-escalation, investors braced for continued turmoil. The expectation of ongoing conflict and diplomatic standoffs ensured that market volatility would remain elevated, as participants struggled to navigate an environment defined by risk and unpredictability. The crypto market, known for volatility, reacted swiftly to the geopolitical shock. A massive sell-off hit digital asset exchanges, with leveraged investors rushing to exit. Bitcoin and altcoins faced steep losses as liquidity evaporated. Within hours, $1 billion in leveraged positions were liquidated, accelerating the downturn. Bitcoin's price plummeted, challenging its narrative as a safe haven. The crisis reignited debates about Bitcoin's role as a hedge against instability. The market's instinct was to sell Bitcoin, treating it as a speculative asset. Bitcoin's price plunged, falling to around $103,000, erasing weeks of gains. Automated trading and panicked investors overwhelmed buy-side liquidity. The $100,000 support level was crucial, with buyers stepping in to stabilize prices. Trading volumes surged, indicating high participation in the sell-off. The market remains on high alert, with Middle East headlines influencing price swings. Bitcoin's future is now tied to geopolitical developments. Overhead resistance has formed, with recovery attempts facing significant barriers. Geopolitical crises trigger a flight to safety driven by fear. The U.S. strikes on Iran led investors to reduce risk and preserve capital. Risk assets like stocks and cryptocurrencies were sold off. The probability of negative outcomes increased, altering investment calculus. Inflation and commodities play a crucial role, with oil prices spiking. Central banks may keep interest rates high, challenging Bitcoin's growth. The rush to safety seeks predictability in an unpredictable world. Bitcoin's volatility makes it less appealing during crises, unlike gold. A limited conflict scenario could lead to quick peace. Diplomatic efforts might prevent further escalation, easing market fears. De-escalation would unwind geopolitical risk premiums, benefiting Bitcoin. Oil prices would retreat, easing inflation concerns. Bitcoin could rebound, reclaiming lost technical zones. A peaceful resolution would allow Bitcoin to resume its growth trajectory. A prolonged regional war is a more probable scenario. Escalating military actions could involve Iranian attacks and proxy conflicts. This would draw in regional powers, affecting the global economy. Bitcoin would struggle in a risk-off environment, facing downward pressure. A break below $100,000 support could trigger further sell-offs. High oil prices and inflation would force tight monetary policies. Stagflation would create a challenging environment for Bitcoin. A global crisis could lead to severe recession and crypto winter. The crisis challenges Bitcoin's digital gold narrative. Proponents see it as a safe haven, but market reactions differ. Bitcoin behaved like a high-risk asset, not a store of value. Its volatility and self-custody complexity hinder its safe haven status. Long-term effects depend on conflict outcomes and economic consequences. Bitcoin's identity as digital gold requires market maturity and stability. The recent U.S. military strikes on Iran have sent shockwaves through global markets, marking a pivotal moment not just for geopolitics, but for the future of cryptocurrency. As the world watched the escalation unfold in real time, investors scrambled to assess the impact on their portfolios, and crypto markets were thrust into the spotlight as a potential safe haven, or a risk asset exposed to global turmoil. The immediate sell-off in Bitcoin and other cryptocurrencies revealed a hard truth. Despite years of debate, Bitcoin is still largely perceived as a risk asset by mainstream investors. When fear grips the market, even digital assets touted as alternatives to traditional finance can see their value plummet. The idea of Bitcoin as digital gold, a safe store of value in times of crisis, remains more of an aspiration than a reality. Many investors still turn to physical gold when uncertainty rises, leaving Bitcoin struggling to fully claim its place as a modern hedge. The future of the crypto market is now more intertwined than ever with the unpredictable outcomes of Middle Eastern geopolitics. Every headline, every diplomatic move, and every escalation or de-escalation has the potential to send ripples through the digital asset space. If peace talks succeed and tensions ease, we could see a swift recovery in crypto prices as confidence returns. But if conflict drags on or worsens, the challenges for Bitcoin and the broader crypto market will only intensify, testing the patience and conviction of investors worldwide. This crisis has exposed both the internal dynamics of the crypto market, like investor sentiment and liquidity, and the external forces, such as global politics and economic uncertainty, that shape Bitcoin's price movements. As Bitcoin becomes more integrated into the global financial system, it faces new risks and correlations. Its price is increasingly influenced by the same factors that move traditional markets, making it both more relevant and more vulnerable. The current crisis is a true test of Bitcoin's resilience and the strength of its narrative. Can it withstand the storms of global conflict and emerge stronger, or will it falter under pressure? Long-term fundamental questions remain about Bitcoin's role as an inflation hedge. Will it eventually be seen as a reliable store of value, or will its volatility continue to undermine that narrative? As the world watches these events unfold, the crypto community and traditional investors alike are left wondering, will this be the moment crypto falters, or will it adapt and forge a new identity in the face of unprecedented global challenges?